President Trump recently attended the World Economic Forum in Davos, and once again, housing took center stage. We've already heard about some of the ideas like the $200 billion plan to buy mortgage-backed securities and the talk of banning institutional investors. But there were also some important things mentioned and some things not mentioned that buyers and sellers need to understand, especially if you're thinking about making a move in 2026. Before Davos, the president talked about allowing people to borrow from their 401k for a home purchase without tax penalties. That didn't come up at the forum, but it tells us something important. Affordability is clearly a major concern in Washington right now. We've already seen that banning institutional investors probably won't move the needle much. They only own about 1% of all homes nationwide. The mortgage bond plan did create some short-term relief. We even saw rates dip to 5.99% briefly, but that didn't last. Rates are back in the low sixes. Then came a new idea, and this one raised some red flags for me. The president connected credit card debt to housing affordability and suggested temporarily capping credit card interest rates at 10% for 1 year to help people save for a down payment. I'll be honest, this worries me. High interest debt is a problem, but lowering rates like this doesn't fix affordability. It risks encouraging people to spend beyond their means, and that's something we've seen before, especially leading up to the 2008 housing crash. Here's the reality. Most financial experts recommend saving 20% of your income, but the average American is saving less than 5%. The real issue isn't interest rates on credit cards, it's supply, savings, and long-term planning. Now here's the most interesting part of what was said. The president also made it clear he wants to protect existing homeowners. Millions of people have built real wealth through their homes, and aggressive moves to force prices down could hurt those families. So on one hand, there are ideas to help buyers, and on the other, a desire to protect homeowners. That's a tough balance. So what does this mean for you? If you're thinking about selling, you need a clear plan. Many homeowners have great rates and strong equity. Selling only makes sense if your next move is financially sound. If you're thinking about buying, focus on what you can control, your budget, your payment, and making sure you plan to stay in the home at least 5 years. Now, there is one proposal that could actually make a meaningful difference. A new bill introduced in Congress would eliminate capital gains taxes on primary homes if you've lived there at least 2 years. That's huge. Current exemptions haven't changed since the 1990s, even though home prices have tripled. If this passes, it could unlock inventory and help more sellers make a move. Will it pass? Hard to say. Washington moves slowly. What I do know is this: the market we're in now is likely the market we'll see into 2026. Rates are steady, demand is normalizing, big headlines may come and go, but local data is what really matters. So if you're thinking about buying or selling, don't get caught up in the noise. Contact us for a free strategy session and let us help you make the right move for your situation. Because smart real estate decisions aren't about politics. They're about planning, timing, and strategy. Thanks for watching.